Hey guys, welcome back to the channel. In today's video, we're going to be looking at car loans and ways to buy a car. But before we get into the video, go ahead and click on the subscribe button, turn on notifications so you can stay up to date. Guys, getting financial freedom is going to be a life-changing event. The more that you put into this, the more you get out of it. Watch all of the budgeting videos, things of that nature, to see exactly how you can do it. Step-by-step guides that we're doing every day with videos to getting that financial freedom. So let's go ahead and get into the video, guys. Ways to buy a car, you really have three big options. One, paying cash for the car. Paying cash for the car, you straight out own it. You don't have payments. There's no term. There's no rate. There's nothing. Car is $10,000. You give them $10,000. Congratulations. The car is yours. Second option that we have is leasing. Now, leasing a car is essentially just kind of renting the car. So they will give you the car for a set term, usually 24 to 36 months. Over that time, you pay them X amount of money a month to lease the car. But in turn, they do have rules and regulations. When you lease the car, has to be brought back in a certain condition, cannot have over so many miles. There's a lot of parts when you're leasing a car that you really need to go through, read the fine print, because essentially when you get to the end of the lease, you go to turn it in. They charge you for XYZ, you get charged for tires, sometimes if you're over on mileage, things of that nature. But again, you're kind of renting the car, you are not owning the car. Last one, of course, is financing. If you're looking to get a loan, that is the most common way that people do purchase a vehicle, either leasing or buying the vehicle. If you're buying it and you need financing, banks and credit unions will absolutely do this. And we're going to go through a bunch of different things to really look out for when you're looking at buying or when you're looking at building up your credit, things of that nature. So if you're looking at financing your vehicle, you can finance it directly through your bank or credit union, or a lot of dealerships do have financing themselves. However, you do have to be very conscious, again, that we've talked about, knowing your credit score, knowing your rate, knowing your term, also knowing if there are any other caveats to the loan. So a lot of institutions do have application fees. They do have early termination fees. They do have a lot of things like that, that a lot of people can actually overlook. Some of the fine print when you go through the details, look at the cost, look at your purchase agreement, make sure you know exactly what you're signing long before you do sign it. Now, interest rate plays probably the absolute biggest role within financing a vehicle, where if you look, if a dealership is offering, 5%, 7%, 10%, again, kind of based on credit, shop this around, guys. Absolutely. Go to your banks, go to your credit unions, go to lenders, see based on your credit score where you're going to get the best rate, because that is going to have the largest factor into your monthly payment. So let's say you're financing, $30,000 at a 5%. If you can get that same $30,000 at a 3%, your monthly payment will be lower. In addition, when you're making your payment, possibly depending again how the loan is created and built, you could be paying down your car faster. If you're putting extra money on there, of course it is going to be paying down the principal faster, but a lot more money of that monthly liability is going towards the actual interest that is accumulated from the bank or credit union, but more is going towards the car, depend on the rate that you have. General rule of thumb, guys, if you're buying a car, is you want to try to stick to a 5-year term. Now, why is this, guys? When you start pushing it out to 6 years, when you push it out to 7 years, when you even push it out to 10 years, like we see with some, you're not building the equity in the vehicle as fast as you could. If you have let's say a 7-year term, for instance, you're spreading your payments out to make them affordable over a 7-year term. As a result, you're not paying off that vehicle. The loan to value on the vehicle can be much higher than you kind of expected. Also, if you're putting money down, that is the other big thing, guys. Make sure that when you're buying the car, I would probably recommend putting 10 or 20% of the purchase price down if you can, not taking the loan out for 5 more years. If the payment is not going to work in your budget, which we know we did the 50-30-20 rule, if the payment is not going to work in your budget, possibly looking at a cheaper vehicle to really make sure that it works, guys. What I don't want you to do is go spend 15-20% of your gross income, resulting in you being essentially, how they put it, car poor. Is that between not only the car payment, guys, you also have to take into factor the maintenance cost that could come with it, the fuel cost that comes with it, the insurance cost that comes with it. There are a lot of other factors for owning a vehicle that you have to take into account, getting quotes for insurance, again, looking at possible maintenance costs, and also the price of gasoline that has been absolutely incredible throughout the United States as of recently. It's almost doubled within the last couple months, which again is kind of crazy. Now, when you're looking, number one step to do when you're looking for a car loan is one, go in with a plan. Look at your budget, know how much car you can afford, know exactly what you're looking for. Does it fall in your price range? If I'm looking for something that's $30,000 to $40,000 and I'm looking at a 2022 brand new Yukon, chances are the $30,000 to $40,000 is never going to fall within that range because those vehicles run about $100,000, which is absolutely incredible. But again, knowing exactly what you can spend on your vehicle is what you want to. Online, there's a ton of calculators based on your rate, based on your terms, exactly what you can afford. Again, look into your budget, look at what the cost of the vehicle is going to run, and also look at the cost of what the insurance is going to run. Depending on the vehicle you're getting, if it is a smaller size SUV compared to, let's say, a Chevy Camaro, kind of more of a sports car insurance, of course, is going to be dramatically higher than you're going to find with a more reliable or more conservative car. Now, make sure that you have your insurance. Good thing to have if you are doing loan applications, things of that nature. Definitely making sure you have the insurance for the vehicle, you have the purchase order if you're not going through the dealership. Also making sure that you do have income. It just makes it easier that way. If your financial institution does ask for anything, you already have all the documents. You already have all the documents prepped and ready. That way, when you come in, everything that they could ask for, you do have. Now, again, when you do the application, there are a lot of things to consider, including are there upfront costs. Some institutions, again, will charge an application fee. So if you go ahead and do an application, they charge you a $165 application fee. Most of your credit unions, or pretty much any of the credit unions, do not have an application fee. In addition, a lot of institutions have an early termination fee. So if you take the loan out for 5 years, if it is paid off within the remaining 6 months of the loan, a lot of times they will charge you a couple $100 for paying your loan off early. Again, really, really shop that around, guys. Make sure the term is going to work in your budget. Also, make sure you're getting the best rate. Again, the rate is really what drives it, based on your credit score, which we've talked about in other videos, based on your budget, which we've talked about in the 50-30-20 video, making sure that everything aligns to, can you afford this car? Can you afford the payment plus the insurance plus the just sheer cost of expenses of having the actual vehicle? So during the loan, guys, you want to make sure, again, based on credit, that you set this up for automatic payments. I am a very, very big advocate of doing the automatic payments because you know that it is paid. As long as you have the funds there, it is paid. You're not going to be late affecting your credit. You're not going to miss a payment to affect your credit. We want to make sure that you are setting yourself up again to be financial free. So in summary, guys, one, know your budget. Know exactly what you can afford. Know the true cost of a car. Where if your payment's $300 a month, doesn't mean you're going to be paying only $300 a month. Absolutely not, guys. Again, you have the cost of gas, you have the cost of repairs, you have the cost of insurance. There's a lot of other aspects that you have within there that you do have to take into account when you're doing a major purchase, whether it be a car loan or something else, really taking everything into account. Guys, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.